Alrighty, folks, we need to talk about how the market is set up for the Fed meeting. What are they expecting? Tomorrow afternoon could really be some fireworks if the Fed comes out more hawkish, frankly, also more dovish, although I think this meeting setup giving 5 readings of sticky inflation mean that the chances of being more hawkish, I don't know that the market is set up for, but we'll go through the numbers. We'll talk about what's what. We'll talk about home builders, what is going on with home builders, both sentiment and actual production. We will talk about the golden handcuffs of lower rates and why that is a cause of the broken housing market. We could also talk about Japan. Japan, folks, has been on a 17-year journey of negative interest rates. That is now over. The last major economy with negative rates is over, so that's interesting. It's been 17 years they've been running negative interest rates. So let's get into it. Let's talk about how the market is set up for the Fed meeting. This is interesting because, again, you need to know how the market is set up so that if the Fed does something unexpected, we can kind of lean forward. And if you're like me and you can look at what the market is set up for, you can take your personal opinions and you could skew them one way or another. So let's get into it. Currently, as of right now, the market is pricing in 3 rate cuts for 2024 and 4 rate cuts for 2025. We are finally in sync, right? The Fed has told us for the last 90 days that we are getting 3 rate cuts. The market started with 6. We are now in sync. I fear, I fear, and frankly expect that the dot plot will not be as clear as it was last time. I expect that we might see 2 rate cuts in 2024. In fact, it is getting more and more obvious that the chance of 0 rate cuts is a real possibility. So that is what the market is set up for: 3 in 24, 4 in 25. Okay, great. What about GDP? Right now, the market is set up for 1.6%. That is down from 2.5% last year. So again, the economy is slowing, but not negative. But again, we got to remember that these GDP numbers are nominal, not adjusted for inflation. So, okay, great. If GDP is expected to go up 1.6% in 2024, what about inflation? Well, right now it appears that they are fearing that CPI will be sticky. CPI is expected to come in at 2.7. So, first, if we're going to do the math together, nominal GDP of 1.6 with inflation of 2.7, what does that mean? That means adjusted for inflation, we actually are negative. Our economy is shrinking. It's just the money that's being inflated. So again, that is expected to be negative. I would actually argue that that may be very close to what is economists would call stagflation, right? We have sticky inflation, low growth. Some might call it a rolling recession. It depends on what parts of the economy, and we'll talk about that more in a minute when we get to home builders. And then finally, this is the one that I don't agree with. And I don't agree with it, and it scares me a little bit. Right now, the unemployment rate is expected to peak at 4.2%. I hope that's true. I hope that's right. It just doesn't feel possible, right? It feels like we're going to see unemployment because it's always the last thing. And if you look at the charts, when it breaks fast. So I hadn't thought about this, but if I were to put a number on it, it might even be 5%. Unemployment may spike to 5%. And again, if it goes from a low of 3.4 to 5%, that could be on the cusp of inflation or recession. So again, These are the numbers, and we're going to get a look tomorrow what the Fed presidents look at. So again, I've given you the numbers. The dot plot comes out around 2:30, I think, Eastern, 11:30 Pacific. We'll look at it. We'll see where the market is off from the dot plots. We'll talk about it tomorrow morning, but that is very important. Well, let's talk about home builders. Home builders. Let's look at first home builder sentiment. Again, these numbers really mean nothing to you, but below 50, think contraction or negative. Above 50 is positive. Well, home builder sentiment is now 51. So it is over 50. It is the first time that is turned positive since last July. And obviously, some of that had to do with rates going down in February and activity and things of that nature. When we look at the home builder numbers, 24% had price cuts last month. That's actually down from 36 in December. So builders are producing stuff that more people want, less price reductions. 60% of home builders had incentives. You've heard about them, rate buy downs, closing costs, maybe some move-in stuff. But again, at the end of the day, home builders are saying that they know where buyers are interested with mortgage rates below 7. And again, the builders have proven that real activity happens below 6%. And again, builders can go there. But now what about actual construction? So sentiment was Monday. What happened with actual activity? Actual activity, we see single family permits up 1% month on month and starts up 11.6. Folks, I believe that the construction industry might be one of those evidence that we are having a rolling recession. Again, rolling recessions are rare. And again, we've seen the mortgage industry, real estate agents take a hit the last couple of years. Builders pulled back. Now they seem to be figuring out what buyers want. There's not a lot of inventory, as we know. So we may be seeing the construction industry, specifically single family homes, pull us out of what might be a recession. So again, we got to really watch the builders. And again, my hope, my belief, my prayer is that builders follow Lennar and really start building smaller and smaller homes. They can build them at a cheaper price point. They can get more units done. This could be something that pulls us out. And really, it's going to take time. You can't fix a broken housing market quickly. It is going to take years, just like it did in the 80s. So again, very interesting. It's clear that construction is picking up in single families and falling in apartments. That is very clear. But again, this might be something to look at. So again, housing starts were up collectively 10.7% month on month. The estimate was only up 8, so it exceeded expectations. And last month was a negative number. So again, the trend was positive. Annualized units, 1.51 million was where they came in at. But yes, the apartment boom is over. I read an article this morning talking about 56% of Americans can't afford a $1,000 emergency expense. And we are definitely a nation of paycheck to paycheck. I hope that is not you. If you've been watching this channel for any length of time, you are likely having a reserve, emergency account, all of that. But yes, I think it's a sad state of affairs that 56% of folks can't afford a $1,000 emergency. One of the things that I look forward to doing today is having a conversation with Beth Traverso. Beth Traverso is our Tuesday guest at 10 o'clock. We are going to talk about NAR settlement. We're going to get her insight and her opinions. I promise you that video will be loaded today, probably at 5 o'clock tonight, so you can look forward to that. But the more and more I think about the NAR settlement, and again, it's not signed, it is only a proposal. First thing I do is I think about VA buyers. VA buyers, I don't know if you know this, but it is my belief that VA buyers can't bring stuff to closing. And now if a VA buyer is responsible for paying potentially even a flat fee or some kind of commission, What does that do? I don't know. Do the rules have to change? Does the program have to change? I don't know, but that's something to think about. The other thing that I can't wrap my head around is an article by the New York Times. New York Times put out an article that said housing prices to drop because of NAR settlement. Really? I don't understand how that would work. Right? If you guys don't know, I'm sure if you're on this channel, you've either bought or sold a home or at least plan to. Traditionally, when a seller sells a home, they list the price at appraised value. They don't look at some number and add 3% or 6% to pay commission. It's the appraised value. It has nothing to do with the commission structure or closing costs or any of that. I don't know how the appraised value or expected value would change because of commission changes. I don't understand how that works. And obviously, I think the New York Times was going for clickbait and all of that. But I mean, at some point, you really got to question motivation. I mean, how would prices drop because of commission changes? I don't get it. I don't understand. I don't understand how home values are affected by that. I don't know. It was crazy. Other things that I have noted is more and more people are talking about the American consumer, specifically homeowners, are in good shape because fixed rate debt. Something I think we brought up well over a year ago, at least at the time, the effective mortgage rate in the United States was 3.6%. That today is undoubtedly higher as more and more mortgages are issued higher. But the reason that that is important is because when you take your debt structure and you fix it at lifetime low rates, as your wages go up, you have more AKA discretionary income. And we wonder why the economy hasn't fallen off a cliff like other nations. Well, if 65%, which is what we currently are homeowners, have a debt structure that is largely fixed, and we have wages increasing, that's just more discretionary income. That's how it works. So pretty interesting to see more and more folks talk about golden handcuffs of low mortgage rates. One of the interesting things that I am thinking about, and definitely give me a conversation with Beth Traverso later today, is what about the stuff around real estate agents and real estate brokers? I saw that Zillow, for example, has taken a large stock hit. I guess that makes logical sense to me as someone just on the outside. Why is that? Because again, Zillow, a lot of their current revenue stream is marketing dollars from real estate agents. So if you are to believe the numbers that are proposed, that commission totals are going to drop 20, 25, 30%, that undoubtedly means less marketing dollars. It's very simple math. So that makes sense to me why Zillow would be knee-jerk reaction down. But I ask you this. This is where my mind went. And again, this is really early, but I wanted to share with you what I was thinking. What if Zillow and or Redfin, or frankly, a brand new company, created some kind of online marketplace where buyers could come and pay some kind of flat fee or something, and that's just a new revenue stream, right? Today, I don't believe any services are monetizing buyers, but you could at least think about why that might work. So again, I think the entire housing market and industry has been flipped on its head. There will be a lot of changes, some good, some bad. I don't think we know what they will be, but yes, there's a lot of change coming. Let me see if I want to talk about anything else. No. Again, fireworks tomorrow afternoon is going to be interesting. I will personally be watching for two things. Any Fed president talking about going higher. Last time, 0. Everybody said we were at terminal rate. How many folks say we're going higher? I'm going to guess 2 or 3. That is what I will be looking for. That's the number one thing I will be looking for. Who's going higher? And lastly, how many rate cuts in 2024? Last time was 3. have they lowered that perhaps to 2? That's what I'll be looking for. But hey, we will talk about that tomorrow and Thursday. But before I let you go, we got to congratulate Craig for getting his next deal. Craig, congratulations. We will be sending you your black card. Folks, again, if you don't know what these are cards we send out to people that are doing the work. You get a black card for your next deal. You get a golden ticket for your first deal. So congratulations, Craig. And I haven't worn this in a while. Oh, sorry about that. But we have the cash flow over everything shirt. It does come in more and more colors. We usually wear the black one, but it does come in gray. Remember, this shirt is only available for the month of March. So if you want to get it, you've got a couple of more days. And of course, do yourself a favor, buy the course, How to Get Started One Rental at a Time for $3.99. I will throw in the Las Vegas event for free as a $200 value. But also, a lot of you are signing up for that. Don't forget the Facebook group. Trust me when I say that the Facebook group is worth the price of admission. Get around 2,000 other folks doing the work, networking. Send in your first post to the group. Tell them who you are, what your buy box is, and just have a good time being around positive people doing the work. It is an awesome place to be. So folks, take care. That is the daily financial news. Later.